What's up, everyone? How are you? Happy Thursday. This is the last day of the third quarter 2021, September 30th, 2021. We are going to, let's go over the markets. Let's just jump right into it. Let's pull up the market data right here. The market was down today. The S&P 500 down 1.19%. The NASDAQ down 0.44%. NASDAQ and tech outperforming kind of the rest of the market. The crypto market, about mixed, slightly up, but kind of for the week, it's still down. I think we have just generally weaker markets this week. Lots going on. The one headline I wanted to point out that wasn't in Morning Sense today because it just came out was that Congress passed a bill averting government shutdown, which is, I think this is what we predicted last week and the week before. This is what happens a lot, right? Both parties have differing goals and opinions and butt heads over certain bills, and neither of them vote to pass things and stand each other's way and basically leverage the whole government shutdown thing over each other. A fully functional government, if you will, / sarcasm. So we went over crypto, went over the markets, just some announcements. So one, for those of you that don't know, I've started a new podcast with Tom Nash, a much bigger finance YouTuber here, called Unpopular Opinions. And you might want to check it out and subscribe to the channel. We did an amazing interview with Serpentza, the original China YouTuber, and it was about an hour and 45 minutes. And I learned so much from Winston. I recommend, if at all you have any interest or any holdings in China, Chinese ADRs, Chinese stocks, or just any interest in the top 2 superpower in the world, I highly recommend this this video. And I think people have really enjoyed it so far. I mean, we did this yesterday, not even about 24 hours ago. And this is a brand new channel with basically no subscribers. And this thing has over 10,000 views. This is a delayed, but when I go to the creator tools, it's over 10,000 views. I think mind blowing. So thanks so much for the support. If you guys like that show, if you like that podcast type of format. A slight tweak to these live streams. First, we're going to have more structure to it. We're going to add more structure. I think previously, for a lot of you know, this started out in my spare bedroom. I think the structure is going to allow us to repurpose some of the content on the channel. It'll still be very relaxed, like I have the chat up right here. But we're going to have a big section every single time to address the live chat, and we can just have a nice discussion. And then another section dedicated to kind of voicemails, which we've done in the past, et cetera, et cetera. And streams are, as you probably noticed, maybe you didn't notice, streams are now back on the main channel so that we have the broadest reach. But to avoid the algorithm hating or bringing our channel down, because live streams bring the channel down, according to Graham Stephan, and I tend to believe him, we're going to be unlisting these live streams right after they air, and ROIC members will have access to the unlisted link for replayability at acouplescents.com. So we'll post that. We'll post that there. So that's a nice little tip of the hat benefit for ROIC members. You guys will be able to listen to this as a podcast in the back or after the fact. For those of you in Europe, I know a lot of Europeans here, and so that's that. I guess we have a lot to cover today. I wanted to cover the Warby Parker IPO. And for those of you that don't subscribe to Morning Sense yet, definitely subscribe. We cover all this every single morning. Some days are more interesting than others. Today was a very, very interesting day. But it's our free daily email newsletter called Morning Sense, link in the description. And we try to give you as much information, business news, investing news, and little tidbits like valuations and stuff like that. So diving into Warby Parker. Warby Parker went public this week. I think today. I guess it was yesterday. Here, let me pull up my notes. Give me 1 second. There it is. And at $55 a share today at open, it was 36% higher than the reference price of $40 a share. And for those of you that don't know what Warby Parker is they are a eyeglass and sunglasses company. Their differentiation is their direct to consumer. They have showrooms in some states that allow it. Ophthalmologists on site that can give you prescriptions, and then they ship the glasses direct to your door. I think you have Warby Parkers on.
I do. My last 2 frames have been Warby's.
And how do you feel about the experience? I know you're a big fan, right?
Just price. They're
cheap. Yeah, they're like $100.
Yeah, they're great. My vision is fine. It's more computers, cameras, things like that. That's why I need glasses. I've heard that maybe they fixed this. I've been a customer since the very beginning because I was in SF, so I heard about it early. But I've heard that the actual quality of the lenses themselves might be lower when you do through the mail versus in person, but I have zero complaints.
Wait, so in your experience in California, you could buy it on site in person?
Yeah, there's a Warby in Coconut Grove here.
Yeah, so I bought something from the Warby in New York and the Warby in Nashville. And I think the regulations in those states or those cities were that you couldn't get them on site, right? Because it's kind of what I would say is it's kind of like how Tesla had a ton of problems selling their cars directly to people. There's like a lot of these industries are like cartels, right? One of the greatest examples, there was a Planet Money on it like years back, was like being a beautician, and you need a beautician's license to cut hair, right? Like, and so people like libertarian leaning people are like, why do you need a license to cut people's hair professionally, right? But it's kind of this cartel. It like limits the supply of people that can render those services.
So it's like an emblem if you're a taxi driver in New York, kind of.
Yeah, before Uber killed them, but yeah. So that's what I mean. I think the bullishness on Warby Parker is they are to ophthalmology and eyeglasses what Uber was to taxi drivers in New York.
Yeah, for me, the baseline is you could get 5 try-on pairs before you ordered yours. That's how it was in the mail. They'd send you 5 frames that you could try first to pick one. That was the whole value prop for me. I didn't have to go anywhere. I just went and got my prescription from my doctor, had them printed out, and then got my prescription filled online through Warby. It's great.
Yeah.
And
$100.
Have you seen what they're doing now with their shopping? Like if you shop on Warby Parker on your phone, you can try on the glasses virtually. They put a filter over you of what the glasses would look like on.
That's cool.
Oh, cool. Yeah. So, I mean, are they going to disrupt this industry? It's very big. It's very scattered though, right? Some people like their Chanel frames, Luxottica, etc. So just to kind of go over the valuation though, because these IPOs, right, they don't really, first of all, if you're on like Google Finance or you're on Yahoo Finance, good luck getting any good data. If you're on like Koifin or whatever, it's, I subscribe to kind of institutional level stuff because ROIC members, thank you so much. That's what we're leveraging here. But not only that, it doesn't even hit Centio, right? So we are, I have to go into the filings early in the morning and like do this first. So sign up for Morning Sense if you like reading. If you don't like reading, then just wait for me to talk to you in ASMR. Because this is stock therapy after all. So at $54 a share, Warby Parker, ticker WRBY, is trading for a $5.9 billion valuation. That represents 11 times 2021 run rate sales of $540 million and about 147 times EBITDA of around $40 million. Warby Parker joins Figs, ticker Figs, as a fast-growing, direct-to-consumer, I would call specialty clothing stock, valued at over 10 times revenues based on a hopes of rapid penetration into their respective total addressable markets, TAMs. I like both companies, but the valuations are high. For reference, one rule of thumb is 10 times revs for a fast-growing SaaS software startup. So you're buying in at software, fast growing types of things or valuation for what ultimately is a clothing hardware brand. Now, that's not to say that I don't like the companies. I like Warby Parker. They're already very profitable. They're already pretty profitable, not very profitable. But I do like Figs probably better. Figs is trading at 10 to 15 times forward sales. But I think that industry, they can grow so much faster. And there's much more brand loyalty with like healthcare workers with Figs scrubs. And I know they're expanding to like other types of emergency workers. So, I'm not jumping in quite yet. Moving on. So hopefully that was enough for you for Warby Parker. Moving on, we're going to go to Olaplex Holdings. Now, I know my audience is like 90% male, and hopefully that changes over time. But we have Grace here who gives us great insight on both semi-Gen Z. You're like now I saw the term. You're like a zillennial.
Zillennial.
You're like on the border.
That's true. Because technically from the year, I'm a millennial, but everybody just, because I'm 1999, but everybody just says we're Gen Z.
Yeah, I feel like you're Gen Z. Jacob and I think you're Gen Z. And the female perspective.
I'll be the Gen Z master over here.
What is Olaplex?
Olaplex is the best, and I can't believe you guys don't know about it. So basically, it's a hair product company, and it's kind of like revolutionized hair products, especially for blondes, because like after you like bleach your hair or whatever, your hair like fries. And Olaplex has like this like bonding conditioning mask that you could do, or they have like bonding oil, and you like wear it to bed or you wear it after you shower, and it like helps your hair so much, like heal it and make it shiny and everything.
So why? Like I saw Austin Hankwitz did a TikTok and it went viral, and a lot of women were saying in the comments like, "I love Olaplex. I love Olaplex." Why is this so much better than? Like, I feel like my perspective is very, like, I don't know anything about female fashion or, not fashion, like beauty products. I feel like I walk down the aisles and there are like millions of SKUs, millions of brands, and they all claim to do certain things. So like, why is this so much different than anything else?
I think this one's so different because it's like pushed heavily by hair salons and hairstylists. So if you go, like, I don't know if you could necessarily like go into a Target and get this, but if you go into like a fancy hair salon, they have this in every salon, and hairstylists like push for it. So I got mine at a hair salon that I was at, and I actually did a hair mask last night with Olaplex. That's why my hair is so long and beautiful today. But they also do like, they sell it at Sephora, I know too, and they do like a Christmas bundle, so you could get like a whole bunch of Olaplex stuff. But my whole family uses it.
So does it?
It's the best.
Shorten the time with, because I know an issue is if you color, you don't like something, you have to wait because you just like put your hair through a stress. Sorry if this is a naive question, but like, can you dye your hair more often and not have to worry about your hair completely getting messed up? Is that one of the value props of it? Can you like, you know what I'm talking about? Like you dye your hair, you can't touch it. Can you?
Yeah, you're just worried. Like it just, when you dye your hair like fries out and fizzles out, and it's just bad for it afterwards. Even if you don't dye your hair, you can use Olaplex if your hair is like broken or damaged, or you have lots of split ends, and it just bonds it.
Well, that's a secret, I'm sure.
Oh, yeah, is that okay? So it's,
all right. So sharing my screen. Like, they clearly have momentum. Look at this. 90% year-over-year growth from 19 to 20. They've almost tripled revenues year to date from year over year. So the growth is just absolutely phenomenal. And then EBITDA obviously growing similarly. And at $21 per share, so maybe I should update my valuation. Now they're $24.50 per share. Let's do that valuation. So where is the, hold on, comments? Let's just use, so I think I remembered I added another like 220 million shares for dilution. So let's say it's like 660 million shares times $25 a share. And then there was like 500,000 or whatever net. I think there was 700 million in debt. Hold on. Yeah, 766. So 700 million in net debt. So it's trading at like a $17.2 billion valuation. Let's call it 17 billion. Okay. So if you're buying this company at $17 billion, that represents a run rate of, hold on, let me do this quick math. 17. Oh, so 270 times 2. Let's say run rate. 17 billion divided by 550. 31 times revenues for this company. And divided by like 200. Like 85 times EBITDA. Wait, no, that can't be right. Give me 1 second. Okay, so 6 months ended, so 191. 2. So sorry, 45 times EBITDA. 45 times EBITDA.
Someone in the chat made a good point too, saying that the numbers are probably a little bit skewed because of the hairdressers that were closed in 2020, and hairdressers are really the ones pushing the product.
That's your perception?
Well, I think hairdressers are pushing the product a lot.
In a good way, like you like the product.
Yeah.
And everybody likes the product.
And you're buying them like at salons a lot of the times.
So if they're tripling, right? The question is, do we think they can keep that kind of growth rate up? Because if they can double next year, I think this valuation is really fine, right? I'm just wondering, can you sell $5 billion worth of this product? I don't know.
Do people also, Grace, they have shampoo and conditioner I'm seeing as well. Is it mostly just the hair perfector, or is it normal practice to also, is like the brand known for their shampoo and conditioner as well? Like, do you get pushed to that product?
I don't use their shampoo and conditioner, but the biggest thing I use is that bonding mask that you have up right now.
Okay. Got it.
It's crazy. So this one's an interesting one. Like, you kind of look at their gross margins. I mean, they have really high gross margins. Like, that's crazy. Gross profit is 117 divided by 148. Yeah, they have 80% gross margin. So that means that you're paying 5 times more for the product than what it costs them to make.
That's awesome. Good for them.
It's like a software margin almost. And adjusted EBITDA. Yeah, it's kind of, oh, that's the predecessor. Hold on. Maybe I took the wrong year. I took an old year. Hold on. 214 divided by 270. Yeah, 80% margin, 79% margins, gross margins. And you got 191 divided by 270. Like, what? That can't be right. 70% EBITDA margins. I mean, if you think that this thing could 5x their sales, is this new? Is Olaplex new?
I've been using Olaplex probably since like 2 years ago.
If you had to guess, out of 10 of your friends around your age, or not even around your age, just 10 women that you know, how many are using Olaplex right now?
Out of 10 people that I know, how many do I think are using it? Well, I have all sisters, so we're a family of 4 girls. We're all using it, plus my mom.
Okay, how about outside of your family?
Outside of my family.
You know, there's a bias there because you guys talk to each other.
Outside of my family,
Like at your
yeah, probably
college.
like 6. Like there was a girl that lived in my apartment and she moved out and she forgot her Olaplex. So I took her Olaplex.
6 out of 10?
So maybe like 6 out of 10, yeah.
Okay, so that's interesting, right? Not every woman is ever going to use. JW says, I wish I had 10 friends. Is it overly penetrated? Do we think it's going to double and triple?
They humble beginnings, started in a California garage in 2014. Patented technology.
So it's newish.
Newish.
Yeah, it's pretty new.
And I imagine your friend group or your kind of friend group is going to be way more with the times than the overall female population. Like how many 50-year-old women are using Olaplex? I don't know.
Yeah.
Versus how many early 20s women are using
Yeah, it's
Olaplex.
a newer one. And then the other newer one that I'd say is like its competitor is R&Co. And R&Co is like a big one that's super popular right now too.
Gotcha.
They have over 100 worldwide patents.
Well, this one is an interesting one. I say it looked good at $21 a share, at $24.50 a share. I mean, it looks good if you believe that the product can double and triple. I want to hear it. Do you think they're going to continue to grow like crazy?
I'm a big fan. Danica's a big fan too. She uses it. So
Okay.
I know Danica's in chat.
You have to
She's
pick one.
passionate
If you're
about it.
going to buy the stock on your phone tomorrow
I'm going to buy it.
because you like the brand, or you think it's going to like quintuple?
I think it'll quintuple.
Gotcha. Okay. You
That's-
heard it. You heard it from the horse's mouth.
I'm gonna text my sister right now and see if she's using it. I want to know.
text her,
I
text
want to
her.
know how
We'll come back to
penetra-
this.
how
It's
penetrated
like,
we
it's
are.
magic in a bottle.
That's. I mean the word of mouth and the enthusiasm for it has me interested.
Yeah.
Literally every.
JAHH is saying, no, color my hair every month, brunette. How many blondes are not actually an original blonde? Yeah, not a lot. I would say there's probably more not original blondes than original blondes. Okay. Well, there you have it. There you have it. Olaplex. Cool. All right, let's dive into Palantir. So if you are a ROIC member, you get 4 ROIC dives every single week looking at a stock to a kind of a medium dive degree. And we're going to start pumping out like DCF models. And so I just wanted to kind of outline Palantir given, we'll probably do a dedicated video on Palantir soon, but Palantir's off from its highs and people are really asking because I think low 20s, and we've multiple times in a row, we've assigned an interesting rating to this company. So Palantir is only up about 5% year to date, but it's been a popular name among investors. We gave at $23 a share in last year, we gave it a meh rating. But since then, right, it hasn't really done anything. Since then, its growth has caught up to the valuation, right? The company has kept growing revenues, but the stock price has stayed flat. So it's starting to get sort of interesting. And we gave it an interesting rating in August. So, just last month. And so for those of you that are new to the channel, and if you aren't new, definitely hit that like button. Really appreciate you all. So I'm just reading the comments. Palantir lost Falcon. Okay. So for those of you that are new to the channel, I've made this kind of analogy before. Valuation is kind of like the stock price, and what the market is valuing your company is not fundamentals and not what the company is doing, right? So what happens is a company's fundamental cash flows acts as sort of a spring for the valuation. Now, in the short to medium term, a stock price may not follow exactly what the company is doing. But if the company keeps doing super, super well, a company can only be, over the long term, so cheap, right? At a certain point, if something's trading for 2 times cash flows, someone's going to buy the whole thing. So what happens is sometimes a stock price runs away and the fundamentals are still down here. So you're not really touching the springs anymore, right? So you're kind of Icarus in the clouds. If it crashes or if it stays flat, but the company grows and grows and grows, and then now the spring gets coiled, eventually the stock price should reflect the fundamentals under it, the bedding under it. Now, that's why the opinion's changed, even though the stock price has not. For those of you that don't know, Palantir builds software platforms for institutions. They're trying to position itself as the next default software in data analysis. The company started in 2003, so it's a very, very old Silicon Valley software startup started by Peter Thiel and Alex Karp and all these other his other colleagues. Started by building software for the U.S. intelligence organizations to assist in counterterrorism investigations and operations. Palantir has two main software platforms, Palantir Gotham and Palantir Foundry. The first software, let's pull up Palantir. Yeah, pull that up. First software platform, Gotham, was built for analysts at defense and intelligence agencies, and Foundry is the commercial version of Gotham. And both platforms aggregate disparate and just various data sets to analyze and run the entire data set for insights. The platforms are specifically built to protect individual privacy and prevent the misuse of information, and they're not in the business of collecting, mining, or selling data. They also launched Apollo, which is a continuous delivery and product infrastructure platform, which is used to deliver software updates to Palantir customers, which if you kind of read into their filings, they think is a really big competitive advantage, because if you're a big agency or you're a big company, you need on-prem solutions. Like you want total control, so servers are on-premise. But that on-premise solutions usually means that you're buying a huge license, and updates are you have to basically rip out the whole thing and update the whole thing, right? But Apollo allows them to have a hybrid on-prem style security software with continuous updating that SaaS and cloud companies have done. So I don't really know exactly how it works. Some of you out there might, but I don't. Revenue's growing 50% year over year. They're guiding to 43% growth in Q1. Commercial revenue is growing at 28% year over year and accelerating. Government revenue is growing at 66% year over year due to new deals with the U.S. Army, Air Force, Coast Guard, like HHS and CDC. Just firing on all cylinders. Palantir expects revenue growth of 30% this year and for the next 4 years, ultimately reaching $4 billion in revenue. So just to give you a sneak peek, I know this is public. Don't forget to hit that like button and subscribe. Thank you so much. We're on YouTube after all. These are the write-ups you get 4 times a week. Ken and I write a bunch of equity research for you all. So if you're a Relic member, you get everything in the kitchen sink. Seriously, Discord, picks, analysis, write-ups, everything. Gotham, Foundry, and Apollo. Apollo makes it possible to run Foundry and Gotham on drones, submarines, satellites, classified networks, and on-prem networks without losing the efficiency and scalability of a centrally managed SaaS solution. They're just next gen. They're next level. They're really next level. So at $24.50 a share, or today $24 a share, Palantir carries a pretty high valuation on the surface of it. Let's go to Palantir. They're trading at about 31 times forward gross profit and call it 87 times EBITDA. That's a very high valuation, and I would say the EBITDA one is kind of what I would hone in on more. They have software kind of gross margins, but I would just call out, they have really strong EBITDA margins too of 30%. But I don't think that they can get to 50% maybe margins because it's agency to agency B2B, right? So it's going to be somewhere in between that Salesforce type of company and not. So it looks really interesting, and I am very constructively bullish on it. Well, I'm not very. So I'm cautiously bullish on it in the long term, or bullishly cautious on it. We haven't necessarily issued like this is a no-brainer buy. But for those of you that are Relic members or want to consider doing Relic members, I ran a 15-year discounted cash flow on it and did a write-up late last night, stayed up for it, wrote it up at acouplecents.com. So go check that out. Go check it out and read it. If you're interested in owning Palantir, I'm open to adding it to the big board. But if you're a Relic member, go to the website, and it should be this article, Palantir DCF valuation. Where is it? What did I just do? Palantir DCF valuation right here. So click that, read it. Ran a 15-year DCF on it. And, I can show you it without showing the share price for those, because it's a public stream. And hopefully I think we're one of the only people, if not the only people doing this on YouTube or even out in the open. So definitely hit that like button at the very least, even if you don't want to be a Relic member. So some of the assumptions I have is I give them credit for 35% growth for the next 4 years, right? As they are guiding to. And then I have them scaling down really, really, really slowly for the next 15 years, because the whole point of a DCF is to get them to kind of a steady state, which, again, in 15 years' time, Palantir probably still won't be steady state. It'll probably be innovating because it's been doing so for the last 18 years. But just for reference, that means that I assume in 10 years' time, Palantir gets over $15 billion in revenue and over $24 billion in revenue in 15 years. So 15 billion in 10 years, 24 billion in 15 years, up from about 2 billion in revenue. So you're talking about over 7xing revenues in the next 10 years and over 12xing revenues in the next 15 years. And just to put that in perspective, let's just do a little plotter. Oh, oops, not plotter. Let's do a little screener of sector, ad. Let's go information technology. No semiconductors, no manufacturing, no components, no equipment. Apply. And then we're going to go ad filter, revenue, ad, and we'll say over $1 billion to greater than $1 billion in revenue. So these are software or IT companies that over $1 billion in revenue. I just want you to understand what that valuation implies. So just, oops, click on that, top to bottom. Microsoft, so let's zoom in if we can. Microsoft has 170 billion in revenues. What is going on? So IBM has 73 billion in revenues. Oracle, 40 billion in revenues. Visa, 21 billion in revenues. MasterCard, 15 billion in revenues. So essentially in 10 years' time, the projections that I have in the DCF assume they get as big as MasterCard in the next 10 years. Adobe has 13 billion in revenues. So in 10 years' time, I'm assuming Palantir gets bigger than Adobe. Think about all the B2B tools Adobe has. Yeah. JW saying Palantir will be self-aware if you don't smash the like button. I agree. If you don't smash the like button, they're going to, that's hilarious. And Square, 9.5 billion. Okay. So let's, okay. So there was a lot to cover here, a little bit longer. We went through Palantir, Warby Parker, Olaplex. There's a lot to chew on there. And now let's move to voicemails. And then after voicemails, we'll do live chat. Stop saying revenues. What do I say? Sales? Money's in. Gross money's in.
All right, let's pull up some voicemails here. Me doing it for the first time here. Ooh, way more. We're not going to get to everybody, but there's a bunch more that came.
Yeah, so another little announcement is, 1, smash the like button. 2, we're going to be collecting voicemails throughout the week and then just kind of picking the best ones that might apply to the most people. Because I think one of the complaints about the show was we were trying to get to all the voicemails, and a lot of the voicemail, and you know me, I like to just dig in. I'm an analyst. So I'll dig in and waste a bunch of time on like some esoteric, like Ukrainian stock that nobody else is interested in. So send your voicemails whenever you want throughout the week. There's no time rush. And we're just going to pick like the best 3, 5, whatever we can get through every single week that might apply, or that either is the most interesting, like, oh my God, this might be a really interesting stock, or 2 might apply to the most investors. Cool.
Depends on how much they make us talk about hymns.
Also, everybody's asking about the raffle. I can't give away money this time because my accountants say I can't use Venmo anymore because it's a personal Venmo, and I've been Venmoing people from Just to Know, and we need a company Venmo, and a company Venmo requires a separate company cell phone number, and Venmo's annoying. So blame Venmo.
Pay him in Bitcoin, Justin.
But I can pay in PayPal. But we need to get a company Venmo up and running. So wait a couple weeks. We'll bring the giveaways back. Hopefully you guys don't watch just for that. But I wouldn't blame you if you do.
All right, let's do it.
All right.
Hello, Justin. This is a long-time work subscriber. I was wondering if you could look at Hanes Brands, ticker symbol HBI. I think it's a good value play. They have management's been guiding that to grow at 6% till 2024. They own the Champions brand, which has been doing really good. And I was just wondering what thoughts you have on that company. Thank you.
Yeah, I love it. So Hanes Brands, everybody knows Hanes. I'm probably wearing Hanes underwear right now. I'm not really sure. TMI, right? And Champion, which is so weird. Our resident Gen Z, like Champion used to be the cheap brand that like nobody liked. Oh, they think it's retro.
I love Champion.
No,
It's like my
your whole generation brought it back. It was like a dead brand, right?
I am suspect that Drake had something to do with it. He had like I don't know why. Maybe it was him, but he had like a line of clothing and like sweatsuits come out at like maybe 5-6 years ago.
Gotcha.
The Drizzy.
Yeah, and then I know I remember a long time ago Taylor Swift partnered with like a shoe brand, and it totally popped that company. And a lot of people, and sometimes Crocs will get like a celebrity to bring back Crocs. But the chat is really funny. Do I think this is a value company? Well, let's be clear. They own Maidenform, DIM, Bally, Playtex, which is a condom brand, Bonds, JMS, Just My Size, Legs, Wonder Bra, Gear for Sports. I mean, they own a lot. And let's just see their segment data. Okay, so innerwear. So hey, this is, I imagine, Hanes underwear is half of their business, a little less than 40% of their business. International and activewear. So it's a pretty diversified clothing brand. But I don't know, and you guys are going to have to tell me. This would require a deeper dive. If the recent surge in Champion, I see it all over like the TikTokers in LA, like they're wearing Champion. Like how much is inflated by that? And if we can count on anything in life, it's that style will go out of style in the future. Like, do you think that, or you at least admit that Champion probably won't be as popular in like 5 years.
Yeah, definitely not. I think the reason people like Champion so much is it's like nicely made sweat material. Like the stitching's really nice, it's good quality, and then it's like not like an annoying logo. Like it's so small.
Yeah.
Like it's not.
I mean, no,
face.
that's what they are. They're like they were like a generic brand. They were the lowest. They were like you'd buy like Nike, Under Armour, and it'd be like Champion.
And it's funny too because especially during like COVID, that was the thing was like matching sweatsuits because you could relax but still look put together with like a monochrome sweatsuit. So people would always wear sweatpants with Champion sweaters that matched.
So they tanked 7% today. I mean, did they might have, I wonder if they, I don't know if they reported today, but they definitely underperformed the market today.
This voicemail came in on Tuesday.
Awesome. So thank you for being a ROIC member. It's trading at 8.5 times EBITDA, 6.5% free cash flow yield, low expected growth. This shows me that this shows me that it's pretty darn diversified. So if they are guiding to 6% growth and you want to buy at 8.5 times EBITDA, I think it's like an okay hold. Do I think it's an outperform the market hold? I don't know. It doesn't jump out to me as an outperform the market hold. In the ROIC Discord today, we talked about Corsair Gaming, which is trading at like under 10 times EBITDA and growing probably faster. So that seems to be more interesting to me on that sense. So ROIC members, go check out the big board, go check out the Discord. I just rhymed. And go check out the work on Corsair. So again, I think it's like a good, stable, conservative play, but it's not particularly, it doesn't get me excited.
All right. Next up is a good one. It's a little different than the usual.
Big Justin, what's up, buddy?
What's
ROIC member here. Long time, ever since back in your spare bedroom. Anyway, I have a quick question. I'm doing a renovation to the house. I did a cash out refi, but the renovations may not happen for possibly 1.5 to 2 years. And I might have taken out more than I need. So I was wondering where you would recommend parking that money until I need it, and possibly for the remaining money that I didn't need for the renovation, I could just leave it there. That's going to clear my 3% that I'm paying on the refi. Thanks, Justin, and good luck with the ROIC community and the ROIC family. Keep growing.
Thanks, man. I appreciate it. Thank you so much. Again, opinions, not advice. I am not a financial advisor. But if I had a mortgage on a house and I cashed out refied, because obviously all of our real estate has all gone up, and I wanted to do a renovation, but for some reason I wasn't going to start the renovation in 1.5 to 2 years, and I just wanted to reliably clear my 3% interest rate, I would probably go somewhere more conservative with it, but also try to get some yield out of it. Now, one way you could do it is if you have a little bit more risk tolerance and you want some sort of like upside, I guess, you could try, like, one thing that kind of sticks out to me is that Verizon, that's Vizio, VZ stock. All these cellular 5G companies have been on a downtrend, and the valuations might be pretty attractive. At the very least, I think Verizon and T-Mobile are pretty fairly valued. And This is if you're riskier. If I were riskier. Sticking in Verizon would get you a 4.7% dividend yield, right? So that would clear your mortgage, your interest payments. That would clear my interest payments, but also potentially have some upside. Now, I think the interesting thing is I got a note from, if you're in one of the states that BlockFi still is legally able to operate in, I just got an email that their rates just went up again. And their sponsor, BlockFi's sponsor, Fundrise's sponsor, my favorite way to invest in real estate. And we have a new sponsor coming up, I'll show you. You can just stick it in cash on the BlockFi platform. And if it's somewhere like in that 40,000 range, I would get 8% yield on it, which is really, really attractive. And BlockFi is well capitalized, so I wouldn't really worry about like my money. The only thing you should be worried about is because Coinbase canceled their lend product because the SEC. If the SEC comes down and says that's a security, like you're not on the hook probably. It's mostly the company's on the hook, so they would just have to stop paying you an interest and like probably give you back your money. Another one that, TradeStation started is now a new sponsor. I have to do a review to kick off the sponsorship and move a lot of my money there. But TradeStation Crypto also does rates. And TradeStation's a really, a very reputable company. They've been around since maybe since I was a kid, and kind of a big, more legacy type of trading platform. And they pay on 6% on US dollar coin. So BlockFi has higher rates. TradeStation's been around for longer, but they're new to crypto. So personally, I'd probably go TradeStation, I'd go BlockFi personally. And if you do, you should use my link. I don't have it in there, but whatever. Go to blockfi.com/a-couple-cents if you do that. I think that still works because we'd really appreciate that. Yeah, blockfi.com/a-couple-cents, or you can go to tradestation.com/a-couple-cents, I think. Or just to know. Whatever. Anyway, I give you the information. I don't really need the referral, but I would appreciate the referral. We're not ready today.
We're 48 minutes in. We could pop off another one if you want.
Let's do another one, and we'll do live chat questions.
Okay, cool. One more.
Hey, Justin. I was really hoping you could take a look at Lightspeed POS. Ticker is LSPD. There was a short seller report that brought down the stock in the last 2 days, and I'm looking at it as a buying opportunity. I would love to hear your thoughts on this. Thank you.
Yeah, so Lightspeed POS short report. I haven't seen this. It's Canadian. We all know the Canadian tech premium that we've seen ever since Shopify has been the darling. Let's see what are the allegations. Lightspeed Commerce, LSPD, plunged on Wednesday. Report by Spruce Point Capital Management thinks the stock is overpriced, but management is hiding key information from investors. I can't download the report. Go read the report. I haven't read the report. But if you want the Jim Cramery lightning round response, it's growing well, 100% per year, but unprofitable and trading at 40 times forward gross profit. So, it's very expensive. And I don't know what management, Spruce Point Capital. It doesn't, from a valuation perspective, it doesn't scream cheap to me. I know it's fallen, but it doesn't scream cheap to me. Evidence shows that Lightspeed massively inflated its business pre-IPO, overstating its customer count by 85% and GTVs by 10%. Evidence of declining organic growth and business deterioration despite management claims that ARPU is increasing. Recent acquisition spree has come at escalating costs with no clear path to profitability, while management pursues aggressive revenue reporting practices, weak governance standards, blah, blah, yada, yada, yada. Premium multiple of 47 times 2022 gross profit, despite substandard financial reporting quality, et cetera, et cetera, et cetera. I mean, like, if you're going to pay up for something, why aren't you paying up for Palantir? Yeah. Or even like, I don't know. We have a lot of other growth picks on the big board, so go check out the big board. But yeah, it doesn't scream cheap to me. Like, but I understand the excitement around Canadian big tech or growth tech. Cool. Let's go to the live chat. What's been?
I have some from early on in the chat.
Okay.
Some deep cuts. Thoughts on Facebook at these prices? I don't know if you want to touch Facebook, if that's interesting at all.
We've sold out of Facebook on the big board. I think that they're getting hemmed in from all sides, and they are cheap, but they're cheap because I think engagement's going down and they're peaking. Ammon said could use some more. Go check the chat. That's hilarious. What he called Palantir holders. Not the nicest thing you could say, but I think it's hilarious. Okay, so what was I going to say? What was I saying?
Facebook falling apart. They've peaked.
I think they've peaked in terms of monetization per user, and engagement's peaking on Instagram, and engagement is peaking on Facebook, and more time is getting spent on TikTok. YouTube's doing really well. Yeah, I think an investment in them is a FANG investment, and I probably would just rather have my money in Microsoft, Amazon, even Apple.
Definitely Apple over Facebook.
Yeah.
In my opinion. Next up is PaySafe.
PaySafe.
Someone wanting you look at PaySafe.
Yeah, so we looked at this a while ago. It was a
PSFE.
we've done this a lot, actually. Frequently. They've been, guys, also a lot of this is macro, right? Growth stocks have just been getting hammered, right? ARK Invest is now meaningfully underperforming over the last year. Even after the pump, they've kind of come down. They're underperforming the NASDAQ and the SP 500. So it's a tough market for growth stocks, tough market for SPACs. I don't think I'm going to quickly have an answer quickly enough, but we do have a mini board at acouplecents.com where we keep track of the quick ratings we have. So let me see if we did this recently. PaySafe. PFSE. PSFE? Yeah. PSFE, not PF. PSFE stock. We did this like a month ago, and it was interesting. 5% free cash flow yield, not growing very fast. 16.5 times EBITDA, and that was at 880. So, I mean, if they're all equity, then yeah, now they're trading at under 15 times EBITDA, and probably like a 6% free cash flow yield. Again, I'm going to reiterate an interesting rating on this one.
Thoughts on Dutch Brothers as a long-term hold?
We looked at this IPO was that last week or the week before?
It was recent. I can't remember which week it was.
Dutch Bros stock. It's a coffee chain. Everybody loves them. Let's see. Hold on. Let me see if I can get clean data. I can't show you this data, though. There it is. Hold on. Just wait 1 second. I got a model up. Don't show me. So they are trading at $43 a share. Oh, man. $43 a share? That's crazy.
And just to quickly address that in the chat, yes, we are doing the ROIC stream right after this.
Yes.
We're coming to that very soon.
Yeah, they're a coffee shop trading at 54 times forward EBITDA. Like, no. Just like, no. I don't like it. Yeah, I don't like it. I would say meh, if not a weak sell.
So we're 56 minutes in. Do you want to keep rocking, or do we want to flip it to ROIC?
We'll flip it to ROIC unless we had any other topics.
I mean, there are a couple more. What would be a fair valuation for RIVN? That's kind of an interesting question, but that might take a long time to figure out.
Not 80 billion. Tell you that.
Yep. That's a good answer to that. And then could you go over lie-cycle?
Oh, Ken is saying we wrote about Dutch Bros on September 16th. So go search that on the website and all that stuff. So, okay. Wait, what was your question?
Nothing. That's it.
All right, cool. Thank you so much. I appreciate you all. I'm going to be traveling next week, but I will still be doing streams. They just won't be as well produced as this. I'll go back to my little camera, and we'll be right back here the following week. So thank you so much. Don't forget to hit that like button on your way out and subscribe and smash it and YouTube stuff. Thank you. I appreciate you all. And hopefully see you on this. Like if you're in Miami, hopefully see you around or wherever I'm traveling. Someone spotted me at a restaurant in New York City when I visited. Anyway, bye. Happy investing.